Hi everyone, welcome back to Limitless Trading. My name is Jonathan, and today I have a story for you. The news broke late yesterday afternoon that AT&T and Discovery were in advanced talks to form a new company for the media assets, and I want to go into a little bit of detail about that today. But first, before we get started on the story, I would like to ask you all to subscribe to my channel and click the like button if you haven't done so yet. If you have a comment for me, please leave it down below. All right, this story. Reuters and Bloomberg, I believe, broke the story yesterday afternoon. They were reporting that AT&T and Discovery were in talks to merge the content assets. What that means is the media assets, in order to form a new company that could rival Netflix or Disney. The news initially reported as being able to, as if the deal would be potentially finalized this week, and neither AT&T nor Discovery spokespeople were available for comment, and there's nothing new there. What would it mean? The reported deal would mean HBO and CNN, two of the largest brands, media outlets in the deal, would join with Discovery, Food Network, HGTV, and others that you can see on my screen to form a new media company. Now, looking at the performance of AT&T over the last couple of years, over the last 5 years, it's been a struggle for AT&T investors. The stock is down over the last 5 years. It's down over the last 3 years, during which time AT&T has been on a buying spree. They've been buying up all the media assets from Time Warner, from Warner Media, and that is how they ended up with CNN and HBO. After the news broke this morning, and we'll get more into the news, you can see on the right side of my screen that it's been a big sell-off today, opened really high, and it's been selling off all day. Discovery has a slightly different performance historically. Over the last 5 years, they're up a little bit. They were part of the Archegos family office collapse earlier in the spring, in the actually late winter, I believe, and during that time, they had a large spike. They've been consolidating recently, but overall, over the last 5 years, they are up. Today, however, they are, they had a similar story to AT&T. They opened really high. They traded up above 43 in pre-market and have just continued to sell off all day. They are now down a couple percent. What this means for AT&T is a continued reversal on their larger strategy. Their larger strategy was to acquire media assets so that they could take on these media companies like Netflix and Disney. But as they started earlier this year, when they spun off part of DirecTV, not Dish Network, I forgot the name for a second. As they spun off part of DirecTV, they are now continuing to spin off more media assets in an attempt to trim their balance sheet, get rid of some of the debt, and to focus more on their core business. And if you haven't seen the news yet, the deal was reported as official during the day today, during early market hours. And as we saw in the previous slides, we saw that the initial market reactions are pretty negative. They've both been selling off all day. Anybody who wanted to jump on this one and go long Discovery might have had a bad day today. Now, we don't know what is going to happen in the future, but we know the initial actions are not good. We'll see what happens over the next week, over the next month, and maybe even over the next year. Feel free to please stay tuned to my channel. I'll keep you up to date, as I actually have a position on Discovery, which is what brought this story to my attention in the first place. So I'll keep you up to date and let you know how everything is going. Well, that's all I have for today. I wanted to let you know just real quick about the Discovery AT&T media tie-up, which has now been fully agreed to, and we've seen the initial reactions. Please stick around next time when I bring you more content. And if you haven't yet, you can check out some of the other content I already have on my channel. Thank you.